Hey everybody, I wanted to just talk a little bit about markets today, expand upon what we saw last week. And I'm going to give you some charts. I'm going to give you some things to think about. And then I'm going to finish with how to find great stocks in areas that I think are starting to get a little bit more compelling. So I'm going to show you exactly how to do that. So stay tuned till the last part of this. So we can see the S&P, we're having trouble exactly at that spot I mentioned. We broke down through the support line, had a terrible Thursday, bounced back on that 100-point rally in the last 2 hours on Friday into whatever that was. It was short gamma, a little bit of window dressing into the end of February. And today, poked our head up there, but look, we're smashing our head on that 9-day. I mentioned in the video last week, I said when you get into a little bit of a bearish backdrop, you want to pay attention to those shorter term moving averages. The 9-day EMA, that's the exponential moving average, can serve as a nice little kind of upper bound for markets. You can see it bounced its head off here, a little bit the day before, whatever that was, the Wednesday. And then we poked our head just slightly through there, but you can see that we've got this trend line, but then a lot of other converging moving averages, which of course coincides with this market having trouble for a lot of fundamental reasons we'll talk about in a moment. So here's your QQQ, a little bit weaker, right? We've seen a lot of weakness in the MAG. So this one didn't actually manage to get back to that 9-day, but the 9-day did act as resistance on Thursday. Nice bounce back as well on Friday. And here we are, a lot of damage on the charts, as I've been saying. So what's on everybody's mind? Well, this week we've got tariff headline mania, right? So it's all about the tariff tantrum. 25% tariff on Euro autos. That's out there. Tuesday, are we going to have this tariff tantrum? That could be very interesting because either it's happening, the Canadian tariffs, etc. Either it's happening and the market just kind of accepts whatever the result is. Maybe just knowing an actual decision is going to be knowing enough, but I don't think that's true. I think there could be a problem that could push this narrative that we could be heading towards a growth scare type scenario. If the gloves are off, Trump doesn't back down. This is a big moment for us, I think, the sort of art of the deal, which is really kind of come out swinging, saber rattling, and then eventually make a deal, right? We want to see that. If Trump does do something like that, I think it's going to really minimize the impact of further headlines down the road because people are starting to get attuned to the fact that it's, hey, let's just, come out screaming and then eventually make a deal. So if it doesn't happen, I think that's very, very negative. If those tariffs do go through, I think it's very, very negative. Especially since basically China's just everyone's going to start tit for tatting, right? It's going to be back and forth, not going to end well. Maybe they make a deal, but we don't know for how long, and the market is not going to like that uncertainty. So extreme fear in markets on the fear and greed index, and certainly from a VIX futures perspective versus the cash, the green is your VIX that you hear about on TV. This is not a happy picture. It could be worse. We could see those front month futures higher than the back month futures. So still in an okay shape from a VIX futures perspective, but well underwater versus the VIX cash. So this is a very, very nervous market. We can look here at Bitcoin coming all the way down before that Trump news on progressing with the crypto strategic reserve. We'll have to see how that progresses. I don't think it's set in stone yet, but look at that bounce from 78,000 all the way to 94. Going to have maybe a little bit of trouble here. We did pull back a little bit this morning towards 90,000. Nvidia, a little bit of trouble, right? We had a nice rally on Friday. It's struggling a little bit today. I think it isn't acting very well. And I have to say for that whole space, that whole semi-space, AVGO, Broadcom's got some earnings this week, also really not acting that well. We really need some good numbers from Broadcom. But even after that, I'm not sure the market's going to place too much importance on it, just as it really didn't for Nvidia, which is what I was saying. I didn't think it was that important, generally speaking. But look, you've got rate cut expectations for the wrong reasons. For the last 6 or 7 months, I've been saying, we're going to get some rate cuts, but it's going to be because inflation is coming down. Powell just wants to get those rate cuts down, those rates down. Now it may be for the wrong reasons if we are getting economic slowing. And as a result, you can see tail hedges absolutely exploding. People buying up those upside VIX calls. We've seen positioning from dealers' perspective very, very negative over the last 6 or 7 months, and it just gets worse and worse and worse. So the VIX is relatively tame right now, but if the time comes and this market starts to get a little bit more concerned to the downside, I think you could see a real explosion in the VIX. It needs that impetus to get it to that point, and it isn't happening yet. So let's take a look at this just out of interest. Look at this 0DTE record for 0DTE. Again, 56% share in February. Everyone loves to trade 0DTE, 0-day options. Now, this is what I was getting at. So let's take a look at low volatility versus high beta, right? So we've seen this big unwind in momentum across the board. And I think this is another wake-up call. We had one back in August. And this is a furtherance of that, I think. You can kind of see as the yield comes down, if we do get below 410, that's going to be a little bit of a problem, I think, in general for markets, because that's going to signify that maybe something is happening below the surface. There could be that growth scare could become more of a reality. But look at high beta versus low volatility. High beta smashing its head on that trend line and really, really underperforming. Take a look at this. Low volatility, so SPLV, we're going to show you what kind of names are in there, bounces off that moving average and acting really, really well. And look, versus the equal weight S&P 500, which I think is very significant. Even versus the equal weight, look at what's happening here. Multi-year potential reversal happening here. I think that is very, very intriguing. What kind of names do we have in there? Well, it's tried and true. Things you can touch and feel, right? I've been talking about that for about a week, just saying, maybe the market's going to start moving towards things you can touch and feel. The digital world is being disrupted by AI, by quantum, maybe. All these things going on out there, super, super high competition. All these companies going bananas on CapEx, spending 75, 100 billion plus dollars to figure out the AI thing. Maybe it's time to start to look towards real tried and true things again. Look at great names like Visa and MasterCard that have been doing great. Coke, Berkshire. I'm going to talk about Medtronic in a moment. So look at the sector weightings here. Utilities. Utilities are a little funky right now because we do have that AI component to them, that power generation component. So, utilities are sort of neither here nor there at the moment, but financial services, I think things like, banks still look kind of interesting. I'm looking at Goldman to put a position on there. Look, consumer defensive, and then industrials, a little bit of technology too, right? Healthcare, I think some interesting healthcare names in there. Real estate we see has been doing quite well lately. And this could be in keeping in tune with what we're really seeing. We've had a couple of good years of very, very few stocks kind of leading the charge. And typically after that happens, I'm not saying anything's typical about these days, but typically after a couple of years like that, we haven't seen this for about 25 years, you get this real broadening out into all kinds of other things for a period of time. So, my point is, and I've made this point several times over the last several years, is just kind of don't just get stuck in, trading AMD and Nvidia and Microsoft and those kinds of names. A couple of mags I love in there, Amazon, Meta, I think they still do well. They're in the right places at the right time to monetize AI. But just be careful out there with some of those technology names. Probably due for a bit of a bounce in here, but there's a big, beautiful world out there. So what I've done is I've set up a screener in my bar chart here, which is really amazing. And I've dropped in all the SPLV, the low vol holdings that I showed you earlier. And I've run my scan, right? So I've got a whole bunch of cool things that I look for, very strong technically. I look for things with an appropriate IV rank. I want to find options that are basically, priced kind of with, between the goalposts. I don't like to sell them when they're too low. In terms of implied volatility, that just means option pricing. I don't like to sell them too high. So I like that sort of sweet spot. So I've run this scan looking for great companies like that. And the result is this. I'm going to show filter view here. And I'm going to filter by market cap. So here we go. We're going from the highest market cap and then down from there. And look what we've got. Berkshire, Visa, again, performing fantastically well lately. RTX, you've got all sorts of real touch and feel things, some tobacco and things like that in there too. But Medtronic, look at what an amazing stock Medtronic is. Look at this move. I mean, medical devices, just an amazing company, unbelievable balance sheet, has been doing fantastically well. I'm not saying chase these things, but these are things you should have on your screen now. Make room for stocks like this as opposed to just kind of having the usual suspects on there. Look, Hilton, NASDAQ, of course. Why not? Exchanges. Look at the option volumes I just showed you. Fantastic. Yum Brands. Restaurants, a little bit of utilities in there, right? But I don't see VST in there, things like that. Just kind of like high quality stuff. So I think those are very interesting places. Here's your Visa chart. Look at that chart. Unbelievable cash flow generating company. What a moat it has. Just fantastic company. So these are the places that I'd want to look. Take a look at that SPLV, see if there's some interesting names in there, start putting those on your watch list, and maybe you'll find something interesting. Hope you guys enjoyed that, and we'll see you next time.